Hey everybody, welcome back to the Peak Financial Planning YouTube channel. Today is a video of a different take. I was recently quoted in an article about this Betterment study that came out recently talking about how retail investors, the typical investor, is feeling more optimistic when they work with a financial advisor versus using a robo-advisor. This is a really interesting study because Betterment, the publisher of this study, is actually a robo-advisor. They provide a AI-based or algorithm-based investment management tool that would bypass the need for the personal relationship with the financial advisor. And they actually came out with a study that talks about how one of the data points in this study is that financial investors with financial advisors find themselves more optimistic about their financial outcomes. It doesn't have to do with the rate of return or how well the investments perform on behalf of that investor. It's simply talking about the psychology, the optimism that the investor or you, the watcher of some video like this, would feel when working with a financial advisor. So I thought I'd make a quick video about it because I find it very interesting that they would publish information that kind of conflicts almost directly with their service that they offer, which is the robo-advisor bypassing the financial advisor. So let's jump in. The data points that we want to talk through are here. So we'll start with this one here, which basically is what I already addressed. So 59% of the respondents to the survey expressed a positive financial outlook. Now, that's been trending upwards over the course of this year due to current events and news. But what's more important is this purple highlighted section. Financial advisors play a significant role in shaping investors' optimism. People with advisors have a more positive outlook, with 72% expressing optimism for 2023 compared to 42% of those without advisors. So I thought I'd like to share a few points about that. What are some of the reasons that someone might feel more optimistic about their financial situation when they're working with a human or a person rather than an advisor? And there's a couple reasons. One is most investors or yourself watching this video simply don't know what you don't know. You don't know what questions to ask, and therefore it becomes very hard to interface with an algorithm or an electronic tool that actually cannot ask you questions and pull the information out of you that would make you feel more comfortable. Now, a good example of this is most of the time we are attaching our financial outcomes to the rate of return or the growth rate of our investments or our wealth. That is a very poor measure of our actual financial outcome. And I think most retail investors, most consumers like yourself intuitively know that. The problem is we don't intuitively know what other measures we should be tracking in order to check if we are actually making progress or having the potential for future positive financial outcomes. The challenge is rate of return is a very poor measure of it. What are good measures of future financial outcomes? Your savings rate, which is how much can you save per year, and can you save enough per year to actually end up meeting your goals at some future point in time? Again, a robo-advisor or an investment rate of return do not help with that. In addition to savings rate are how do you handle one-time purchases or big purchases, things like a house purchase, a wedding, a honeymoon, a vacation, a car. Those things will have a significant impact on your future wealth because you have to either divert savings towards the current, purchase, or you have to divert money that you've already saved and take it out of investments and use it for a present day purchase. And the question always is, how does that affect my future wealth? Again, a robo-advisor is not going to help with that, nor is a rate of return going to actually give you any input on that information. It's just important to understand that those are the types of things that I believe make people who work with a financial advisor feel more confident. They want to know what other things they can be doing, what other things they should be doing, and what the effects or results of those things will be. And a robo-advisor and an algorithmic trade and a rate of return simply do not address those. The other element that I think is important here is when you work with a financial advisor, you get education. The advisor in question, if they're a good advisor, will spend time educating you on the topics that are relevant to your financial situation. That might mean teaching about investment account types, teaching about investment types, but also teaching about cash flow and budgeting and savings rates and purchases and taxation and tax planning. And I think, again, intuitively, we as investors know that those things matter. We just don't know how to ask or don't know the right question to ask to say, what matters, how much does that matter, and how should I be factoring it in? So anyways, that's kind of what I wanted to talk about. There's a lot of interesting stuff in this Betterment study. I'll link to it in the description to the video below. But these are two really common psychological challenges that investors will face. the solution is work with a financial advisor. It doesn't mean work with just any financial advisor. It means work with a good financial advisor who you trust, who will educate you, and who will help you overcome some of the psychological barriers, not through manipulation, but through showing evidence-based results and also evidence-based recommendations, so you feel confident about deploying your money, about the future outcomes that your behaviors will lead to if you were to either save more, spend less, invest differently, right? You have to feel confident that those things will lead to good outcomes, or you won't execute the behaviors. So if you'd like to learn more about how to qualify a good financial advisor, I have a great video on that. I'll link to it in the description. You can also watch our free masterclass, Navigating the Retirement Risk Zone. And it basically just talks about 8 of the primary and highest results behavioral things you can do to prepare for retirement, including things like cash flow planning, budgeting, estimating your portfolio income, how to understand Social Security, how to understand Roth conversions, how to understand Medicare. That video will be linked to in the description. You can click that. I'll send the video straight to your inbox. And if you'd like to learn more about our business, Peak Financial Planning, or how to work with us or schedule a free conversation, you can also do that through the link in the description to this video below. I appreciate your time and attention. I hope you found this helpful. And if you have any comments or questions, please leave them below the video as well, and I will be sure to address them in either a future video or a text response directly to you. Thank you so much.